Hi guys, welcome to my channel. Before we get started, make sure to hit that like button, also subscribe to my channel. Personal finance for millennials, so make sure to watch the full video. Introduction. Personal finance is a critical aspect of our lives. Yet many millennials struggle with managing their finances effectively. The term millennial refers to individuals born between 1981 and 1996, and this generation faces unique financial challenges such as student loan debt, rising housing costs, and a changing job market. However, with the right knowledge and tools, millennials can take control of their finances and achieve their financial goals. In today's world, personal finance is more important than ever before. With the increasing cost of living, mounting debt, and a challenging job market, it can be tough for millennials to navigate the financial landscape. However, by understanding the basics of personal finance, millennials can take steps to secure their financial future. This guide aims to provide millennials with practical advice on managing their money effectively. We will cover topics such as budgeting, saving, investing, and debt management. By following these tips and strategies, millennials can build a solid financial foundation and achieve financial freedom. Whether you're just starting out in your career or looking to improve your financial situation, this guide is designed to help you take control of your finances and build a brighter financial future. 1. Corruption. Brick-and-mortar stores have run out. In traditional banks like digital and mobile-first Chase and Bank of America are battling for market share with a new type of competitor, challenger banks. These digital-first bank changes are profitable, add customers quickly, and are ready to compete with traditional banks for market share. Millennial choices are the first way. According to a 2021 Morning Consult survey, 37% of people look likely to change banks next year, and 33% have already changed banks in the last 2 years. According to Oracle, 64% of young customers approve of their bank's products, while 56% switch to Apple or Google solutions if available. This generation's frustration with traditional financial institutions is evident in their refusal to talk to bank employees. According to Cornerstone Advisors, only 1 in 5 consumers, aged 21 to 40, said they would like to speak to a bank employee for information. Another factor that keeps millennials away from traditional banks is fees. For example, according to 2021 research by the Ascent, when asked about the most important credit card feature, 1/3 of millennials have no annual fees. Credit cards with no annual fees are also the second most popular type of credit card among millennials, and recurring credit cards are at the top of the list. There is also a goodness that becomes even more important after the pandemic. According to the American Bankers Association, millennials' mobile banking usage rose from 45% to 55% during the pandemic, while branch usage dropped from 13% to 5%. According to a Plaid report, 55% of millennials spend money at the bank every day. 2. Budgeting and saving money. Millennials are on the move and embracing automation, more demanding and more concerned with their finances than previous generations. But contrary to the stereotypes about their spending habits, millennials are just as frugal as any other generation. They just spend and save differently. Millennials in particular are embracing fintech companies' automation and machine learning capabilities to help them move towards their savings goals without hesitation. 3. Investing. Robo-advisors and small investment reduces barriers to entry. The impact of the Great Recession on the financial lives of millennials is most evident in investment. Millennials are less confident about investing after seeing other people's savings take a hit during the crisis. Millennials are also investing less in assets than previous generations, due to immediate financial stressors such as housing, healthcare, and children are learning to borrow money again to use most of their resources. Now tech companies are taking on the challenge of helping cash-strapped millennials invest in their financial future in 4 key areas: retirement, inactivity, lack of energy, and other investments. As fintech companies make it easier to invest, millennials are entering this space, with the share of investors rising from 14% in 2017 to 14% by 2020, according to a study by Broadridge Financial Solutions. The rate is only 9%. 4. Payment. Mobile replaces cash. You will not see millennials come to the ATM to withdraw cash for purchases. Instead, millennials manage their payments, more often from their smartphones, so cash becomes irrelevant. Fintech companies are driving this change by creating new mobile priority payment options that make receiving and receiving money as easy as swiping on a smartphone screen. According to 2020 Savanta research, 46% of millennials use a digital or mobile wallet to make payments, while only 22% of baby boomers do. One mobile payments company with a strong relationship with millennials is Venmo. Owned by PayPal, an app that offers an easy way to share bills and pay off loans from friends. It made $58 billion in total payments in 2021, more than double the $24 billion it made in the same period of 2019. Don't give up space to pay tech giants and startups without a fight. Venmo rivals Zelle is owned by Bank of America, BB&T, Capital One, JPMorgan Chase, PNC Bank, Bank of America, Citibank, and Wells Fargo. According to the company's announcement, Zelle processed $307 billion in payments in 2020, nearly double Venmo's $159 billion. Recently, however, many Zelle users have fallen victim to scams and lost thousands of dollars, raising questions about security and fraud prevention. While a few years ago bank transfer was preferred for doing business with friends, this is no longer the case. According to the 2021 Global Consumer Survey, 43% of consumers now rely on direct payment services like Venmo or Square's Cash App to send money, compared to 34% of those who use their banks. Moving to mobile includes more than just peer-to-peer payments. The number of mobile payment users in the store should increase from 92. According to a marketer, from 3 million in 2020 to 125 million in 2025. Millennials make up 4 out of 10 digital wallet users. Telephone companies played an important role in the transition to mobile payments. Apple launched its mobile payment platform, Apple Pay, in the fall of 2014. Google followed in Apple's footsteps by releasing Google Pay for Android users in 2015. Samsung Pay also came out in 2015. According to the research, after 7 years, Apple Pay accounts for 92% of all transactions in the wallet, while Samsung Pay is 5% and Google Pay is 3%. Research Pulse Debit Issuer 5. Borrowing. Millennials using loans adopt POS loans. Debt is one of the issues of millennials. Millennials currently have $87,000 in debt, according to a 2020 Experian study. Fintech companies are making this figure in real time, creating new technology options for millennials to manage their debt and helping them borrow better for big new things like making decisions at home. As a startup ecosystem aiming to curb Experian's loan growth, it revealed that 39.9% of all personal loans in 2020 were fintech. Also, millennials account for only 28% of personal loans issued by banks, a clear indication that young people are turning away from traditional lenders. Given the impact of the banking industry on prime interest rates, banks have arguably lost more loans than anywhere else. Seeing this, more and more traditional banks have entered the digital loan business, primarily investors. For example, Citibank only invested in other mortgage lenders Clerky, Octane, and Splash Financial in 2021. Among the new fintech lenders, SoFi emerged in 2011 to offer a cheaper option for financial education. The company says its members save an average of about $19,000 when they repay their student loans. SoFi has since expanded its offerings to include other types of lending such as home loans and personal loans. The company makes money mainly through securitization and block loan sales. Conclusions. Personal finance is a crucial aspect of life for millennials, as they navigate the challenges of starting their careers, paying off student loans, and building wealth for the future. It is essential for them to understand the importance of budgeting, saving, and investing to achieve their financial goals. Millennials should also prioritize creating an emergency fund to prepare for unexpected expenses and avoid taking on high-interest debt. They should also take advantage of employer-sponsored retirement plans, such as 401 accounts, and consider investing in low-cost index funds or exchange-traded funds. Moreover, technology has made it easier than ever to manage personal finances, with a plethora of budgeting apps and investment platforms available. However, millennials should be cautious of financial scams and do their due diligence before investing in any products or services. Finally, by being proactive and mindful of their spending habits and financial goals, millennials can achieve financial stability and security for themselves and their families. It is never too late to start taking control of your finances, and every small step toward financial literacy can have a significant impact on your future. What do you think of our video? Let me know in the comments section below. If you enjoyed this video, make sure to hit that like button. Also, subscribe to our channel before you go.